What's good, boys? Welcome to the stream. I'm gonna be trading some gold today. Just gonna cut off my tabs. Okay. So what are we looking for today? Right now I'm on GC1. This is the futures version of gold, just because I'm gonna be trading this on my Tradeovate account. And what I saw so far that kind of caught my eye and wanted me to get in and do a stream today is because of this setup. So for those of you that have been with me for a while, you know that I trade this XAUUSD strategy during Asia session. Asia session starts in 30 minutes, where we get this like sweep of liquidity. First of all, we get this move in the opposite direction, and then a sweep of liquidity. And then if there's a fair value gap and inefficiency inside of that leg, then we look for it to draw up into it, close above, and then go higher from there. And that's kind of what I want to see here, because we already swept the liquidity. So now I'm just going to be looking for buy side from here to first target this area right here, this fair value gap, and then the high. So I'm going to go send out the stream link. There you go, we growing. 725 subscribers. Okay, I want to see if this is gonna let me go full screen. I'm just gonna check it on my phone. Okay, I want to see if this is gonna let me go full screen. Okay, perfect. Alright, so just to break it down for everyone that starts joining now. Actually, I'll wait a little bit. I'm still eating my food. I'm going to mark this out as DOL1 because it's the first thing we're going to aim for. On liquidity number 1. So the way to kind of trade with a safety on net is if you have a target, like say I'm aiming for more buy side, potentially, excuse me, potentially into the high on the daily. Right here, this high and the midpoint of the fair value gap that was right there. So I'm going to be aiming for the midpoint right here. That's my drawn liquidity. That's my bias. And we're inside of a daily bullish fair value gap. Yesterday we got a huge wick into the daily order block right here. Just as I went over in the weekly outlook, so we had this possibility of going lower. I did try to get into some positions right here, but it just kept going lower. And I was never able to get into a position that I was actually able to hold. So now going back down to the lower time frame, we're looking for Asia session to give us our model. And that model that I'm looking for right now is obviously we have some liquidity right here, right? We have lows and these two lows that were just swept and this low that was also swept. So if I make this a little thinner, you can see that this green candle swept it. So now all that we're going to be looking for is a IFEG inside of this candle right here, this 30-minute candle. So anywhere on the lower time frame, like 3-minute, 5-minute, wherever there's an IFEG right now, as I go to the lower time frame, we're going to wait for that IFEG to get created in order to target the drawn liquidity 1. And as I was mentioning, to trade with a safety net, you basically have your DOL1. You know that it's going to get there for sure, right? So you can, instead of waiting for it to close above this drawn liquidity 1, or here, this fair value gap, and then taking your trade to the next drawn liquidity, which would be right here, DOL2. Instead of doing that, where you wait for it to close and going higher, you basically take the trade from here into the DOL1. That way you're already able to go break even and hold it for a potential like reversal, even if it closes above but ends up going lower. So you're already out with some profit. So that's what we're looking for right now, because it's kind of giving us what we wanted to see. So we're just going to wait for Asia session, or maybe before that I'll get in the trade if we get a nice IFEG here. So we did create an IFEG right here on the 5-minute time frame in that same leg that I was telling you guys about, but the next candle ran back down, closed below it. So it's not enough for me yet. We also have this one. So this could be like DOL0, right? Same thing. We just keep going down. This is going to be the first one, this is going to be the second one, this is going to be the third one. It's kind of our trade for the day. So now we go down to the lower time frame, the lowest time frame. We can see we already respected this fair value gap. We have a bearish fair value gap right here. We're going to wait for this to close above this fair value gap, and we're going to get in. Or that's what I'm going to do. So I'm going to get in, stop loss probably below the low, and targeting DOL1. $20 left. It looks like this one's gonna close. I might just get off that. Have to be on GC1. There you go. So that definitely closed above. I think I'm gonna drop like a 300 stop loss. 2644. I mean, that's still below the low of this candle. This is what my trade looks like. Let's go on a little bit of a higher time frame. I don't like sometimes the future charts a lot more choppy. So that's about 300. I think I'm fine with risking a little more. So the reason I'm getting in is because of just a lower time frame confirmation. As I just showed you on the 1-minute time frame, we just closed above and created an IFEG. So we created this IFEG, and we're likely to expand from here into this first one, which we just tapped into on the 5-minute. DOL0. So let's see if we get this expansion from here. And if I get stopped out because I entered a little too early, I'll probably just get in again. This is on my trade day account. So maximum I can make in a single. Oh, that's unfortunate. Yeah, so same thing. Price action is not perfect right now. Like, it's creating IFEGs, but then it's just disrespecting them. That's exactly what just happened. So we're probably more bearish than we expected, right? ICT always says if you're bearish, then price action is going to be respecting almost every single bearish confluence. My position is still good though. This was the entry after the close. Just expecting this next one to expand further, but it seems like we barely wicked into this 5-minute fair value gap and then ran lower, which is fine. That was a trade that I took prior to Asia session opening up, so it was a little more risky. So what we like to see when Asia session opens, let's leave that one there and get rid of this one, is like expansion. Like, because we already got this ton of sell side right here, we have yet to get the actual expansion of the daily candle. So if our drawn liquidity is like way up here at 2670, like I showed you guys the midpoint of the daily fair value gap up here, the midpoint, if it's all the way up here, then it's reasonable to expect that there's still going to be some buy side. So there's going to be a wick above this daily candle. Especially because this previous day, Monday, respected this bullish for rally gap. So we're likely going to be expanding. We also have the high right here of this IFEG, which is what we tapped into. I'm honestly pretty set on this trade. Like, I'm confident this is going to work. Nice. And my position should have survived that as well. There you go. Yeah, I think this one's going to hit my profit target for the day on that one. A little simple trade. And then we'll wait for a little more confirmation, like this 5-minute close, to trade towards our Asia session target, which is going to be this one, DOL1. So once this closes in 3 minutes, I'll probably just get in on my challenges for this TP. Yeah, that's a pretty solid trade. Swept the liquidity. 30-minute IFE or FEG, expecting it to become an IFEG. And now market's pulling up. A lot of people might try to sell from here. And that's the thing, like, you never know really the bias unless you go to the daily time frame and realize that we already cleared almost every single daily bearish or like bearish target, which is bullish confluences. We already filled most of them. Like, this filled most of the daily fair value gaps that we had, the one that we're currently in, and we have yet to fill the midpoint of this one. So I think that we can likely expand at least to like these highs right here, this liquidity, today, because we still have news Tuesday morning. Let's double check. Yeah, so we have news tomorrow morning. So it's very possible that we do get the expansion now, and then news just finishes off the move. The nice rapid expansion. Okay, let's go back to the 5-minute, wait for this to close above this fair value gap, and then we'll get in on other accounts. I'm going to check the chat if you guys are writing anything. This is forex.com. Yeah, I've just been getting kind of pissed off at 8 cap. They just sometimes the market is like delayed. Like, they don't open like Forex Factory does. And I remembered that ICT was talking about Forex Factory for every chart that you use. So I just started using forex.com again. Let's see. That's not what I wanted to pull up. So if you search up XAUUSD, you'll see all the lists. It's this one, forex.com. I still use 8cap just because I like to have a clean gold chart and then the one that I actually mark out stuff on. Just because sometimes I miss something. Like, I mark stuff out, but I miss it on, like, there's something that I'm not seeing just yet. Like, one of those things could be this bearish IFEG. Like, if I didn't mark that out, then I probably wouldn't have noticed it on the chart where I'm like blindsiding myself to these specific things. So that's why it's helpful to have a chart that you keep clean so that you look at it again and you're like, okay. Also, what I think is going to happen, why I think that we're going to get a nice bullish expansion here, is because on the 30-minute time frame there is that IFEG. So I didn't actually miss it. Like, I knew that was there. And why I think that we're going to get a nice expansion without pulling back into it is because this is a balanced price range where we have an IFEG and a FEG. So if we close above it, this is a concept that you guys might have missed because I missed as well when I was watching ICT. It's called it's like a trap, like a seller trap. Like, these sellers right here will be trapped if the market closes above. So it's a balanced price range where there's like sellers right here and they're going to become trapped, and instead of pulling back and giving them an opportunity to get out, market just expands further. Let's see how much this trade is up right now. 400. Yeah, that was a really nice spot, right? Just from the 1-minute IFEG that we got. And then we have this 30-minute that we're pulling into right now on the futures chart. We just want to make sure that we close up above it. I could go break even, but I don't really want to. There's still some room. But if you guys want me to explain the idea behind the setup again, like I said, reopened, which means there was a new daily candle. So look, if I go back in time right here, the daily candle has yet to develop, right? Well, let's go further, even one. So this is the open right here, or the previous day, and then we open the new day. We got that little gap towards sell side, so it has yet to expand. And what it did is it ran on sell side right here, boom, creating the wick. So this will only become a wick if we are really bullish. So if our target is buy side, then once this comes up, like it is doing right now, then this becomes a wick. So if this candle is meant to be bullish, then everything above the midpoint right here will become a bullish body. And this will just be a wick. Hope you guys understood that. You could try to get a position once we close above this 30-minute zone. Like I said, this is a balanced price range. So if we close above it, it's going to be more likely that we don't actually pull back into it. But I would still be safe and leave my stop loss below the low here. Because we're aiming for a big target. Unless you guys are scalping or on a futures account, then you could aim for something a little less, like the high right here, or whatever your profit target is. But the main draw on liquidity, like I showed you guys, I'm likely expecting the news in the morning to expand into this. I'll get in right now on my other accounts once we close above this. I'm only in on this futures one because it was a nice little position. This is really nice though. If this candle also continues closing bullish, then we might not even pull back into this IFEG that we created. I'm gonna go put this yogurt away. Good bread. Alright, so what we're gonna do just to be safe is to wait for the next two candle closes. So this one and the next one.
You talking to me?
No. Because there's a lot of like volatility in this one and this previous one, is to wait for the next two. So we're gonna want to see like a little more closes, at least one or two, just to see that it's actually respecting this zone. But for those that were listening in the beginning, that's what I meant when I said like you can get into the position before it actually runs into your target. So if this is our initial like target or confirmation, like we know that it's likely going to be inside of this. We just don't know if it's going to run down from here or go higher from here. Then you can just take a trade using the lower time frame, like even lower time frame, 5 minute, which is what I used. And then we took that trade from 5 minute, hoping to see it expand and close above once Asia session starts. So let's see if we get some good volatility once we start up right now. If there's anyone still doubting that fair value gaps don't work, like look at this one. IFEG created, it literally pulled back, tapped into it, and pulled back up. It's obviously still hard to get into a position from like a tap like this, but you can see that it's respected, like the one that we took on the 1 minute. The IFEG wasn't respected, but it respected this lower one in the discount twice, and then ran up. 5 minute one disrespected, used as a bullish confluence. Asia session's about to start up and it looks like it's doing exactly what we wanted it to see. So it's probably not going to close above it because we only have 15 seconds left, but the next one is likely going to expand higher from here. So if we wait on the next 30-minute candle, we're probably not going to get an opportunity to get into the trade before it ends up like over here in DOL2. Yeah, that's insane. Okay, I'm gonna close out the trade right now. Boom, 1200. That's 300 off the daily target that I wanted, so I'll take that. I'll secure that. DOL2 hit, and because this is such a rapid expansion, I might expect this to actually pull back before going higher. And because we're kind of like disrespecting this one, we don't want it to tap back in. We'll just probably start looking at something else. Like I said, this is a balanced price range, so it wants to trap the orders that were in here. Like they want to trap them there. Leave those orders there, and we're probably just going to start using the next confluence. So on the 30-minute time frame, I'm going to go up, scale up to the higher time frame and make sure that I'm not missing anything. But this would be the next one on the 30-minute time frame. So this is another bearish FVG. Okay, so the 1 hour doesn't have anything. We just have this bearish fair value gap. So we can pay attention to that. So you can see this bearish fair value gap is kind of huge. So optimally, we'd probably want this to also like run up, close above this one. I think that's going to happen. I think we can expect that to happen. So we also have this 1 hour order block now. So I'm going to be looking for another trade here. Not on this account because I hit my daily target already. I'm just going to look for like a lower time frame confirmation that will let me get into my trade. Remember, we have a really high target. Like this is 2670. So anywhere really right now is a premium price. You obviously don't want to get FOMO and get in when it's running up, and then like as soon as you enter, it's going to go hit your stop loss and then keep going higher. So if you don't want that to happen, what you have to do instead is swing trade. You know that it's likely going to go up here, but you don't know anymore, like, is it going to pull back to this IFEG? Is it going to close above this one? So what you do instead is you just factor in for the fact, okay, it might still do it. You drop a bigger position like this, and you'll still make a ton of money holding it to your target. Like to 2640 even. 2640 to 2670 is 300 pips. So if you were to take a swing trade right now, it's still high probability, and you'll still probably make money. Okay, so what the confirmation that I'm going to be using in a big expansion leg like this is going to be a fair value gap. So let's wait, instead of waiting for like a 30-minute confirmation, we're just going to stick to the 5-minute time frame right now. We're going to wait for 2 more candles to close, and then we'll have a fair value gap right here, which is going to be slightly above this IFEG, because we don't necessarily want it to pull back into the IFEG. We just want a new fair value gap, a bullish fair value gap somewhere above it that we can take to go higher. So that's what we're going to look for. You guys with me right now? I can bring back my beautiful, sexy face. Just kidding. My roommate was just in here, so I didn't want to invade on his privacy, you know what I mean? Okay, 55 seconds for this one to close, and we'll wait one more 5-minute candle. In the meantime, scroll some reels. I don't know. Do whatever you want. What did you guys eat today? You're in from long ago. That's great. See, the thing with swing trading is you don't exactly have FOMO because you just get in with a lower risk position, and you know that, like, even if you're not in with like a great position, you're still going to be making money. I got in with a crazy position, like from down here. Then that 5-minute IFEG was also crazy. You obviously can't predict this kind of volatility, but if you're in, then you will be benefited by it, right? It's not going to hurt you. Okay, this is nice that it's kind of like staying away from it. Remember, it would be the most optimal if we just like didn't pull back into here, because we have yet to close with a next 30-minute candle. So this is not an IFEG yet. You see this? Oh. So on the 30-minute time frame, we have yet to like close above it. So this is not an IFEG yet. That's why I don't really want to see it pull back into it. We just want to see a new 5-minute fair value gap form, and then price use that fair value gap, or let's go even lower time frame. Let's go 1 minute, because it kind of didn't give us that one. Alright, instead I'm going to get in from this IFEG with another position. And if it does tap into this one, then I'm just going to wait a little more. Remember, because it doesn't have to pull back in here because there's a fair value gap right here. So it can just run up from here if it wanted to. And like I was telling you guys about earlier, you guys see how this daily candle became a wick, and this above became a bullish candle like this. I don't know if you guys were paying attention, but that's what happened. You can go back a little bit and look at the daily candle on my screen. Okay, I think I'm going to wait a little more because we still have 20 minutes for this to become a IFPG. It also rebalanced the fair value gap here, so there's no fair value gap on the 5-minute time frame. Rice. Rice is spelled with a C. Rice. R-I-C-E. That sounds really good. Yeah, mad water is a fact. You gotta be drinking your water and staying hydrated. I'm actually feeling a little sick right now. What I like about New York session is that we get this or Asia session, is that we get this New York session volatility. Like on gold, there's always some sort of insane move. And like I showed you guys, if we have that Asia session breaker model, then we're likely to close above and sweep the high. In this case, we just straight up ran and swept the high before we closed above it. But because we know that the target is going to be even higher, like our next DOL, draw on liquidity, is going to be closing above this on the 1 hour time frame. So we know that price is still going to push higher. We're not going to get scared of this buy side and be like, oh, we might still run down. Because all we've been doing recently is just getting these huge moves of sell side. Which is normal because we tapped into a daily fair value gap. Daily bearish fair value gap in the premium. We tapped into that and we got huge amounts of sell side. But I don't think we're going to get sell side until we run at least into the midpoint of that. That's my bias coming into this. Okay, 3-minute fair value gap respected. Let's go to the 1 minute, look for an IFEG to form. And then I'm confident getting into another little position. The thing with trading multiple accounts, if you could do that, is first of all, I'm already stress-free on this one because I know that I already took my profit target, right? I'm already chilling on this one. And I could just trade another one. So even worst case, I take a loss on this trade, I'm still good on one of my accounts. And that's the main thing, that you want to be psychologically free, first of all. And second of all, you just want to, be able to stop trading for a day at some point. When you're trading evaluations, and like me, when I have multiple evaluations, I, can trade them even on, low probability conditions. I just save my funded account for when I see, a really good move. When I see that daily confirmation. I'm still not 100% confident that we're going to move inside of Tuesday's leg. So I wouldn't be trading my funded account and risking it on a lower probability day. I'd want to get some red folder news first, then trade Asia session after red folder news did something. Oh, look at that. 30-minute IFEG. This is on 8 cap though. I don't know if this actually exists. Where is that? Yeah, so see, 8 cap shows that there's a IFEG already, and this kind of threw me off when I was trading with 8 cap. Like you don't exactly, if that there's an IFG already and you get into a position but it didn't actually form just yet, then you're cooked. You're literally cooked, right? What if price pulls back, closes in the midpoint and then runs lower? That's why you can't be looking at 8 cap anymore. Like I decided I'm not gonna trust that chart anymore. I'm just gonna trust forex.com. Okay, 1 minute IFG about to be formed, and then I'll get in. Here it is. Let's get rid of everything else real quick. Actually, okay, I'm just gonna mark it out so it's organized. So right here we have a 30-minute FVG plus IFVG. Here we have a 1 minute. That I'm looking to be disrespected so it could become a bullish IFVG. And then this right here is another 30-minute FVG bearish. Okay. And then we have the 1 hour one. I'm just going to mark it out with a line so we could see it. The 1 hour high is at, what is this? 2642 basically. Okay, so we're going to be targeting this as this one first of all, closing above this one as our next draw on liquidity, and then we have this one as the main draw on liquidity, which would be closing above this in the 1 hour time frame. So 25 more seconds. I'm just gonna go check on my car. The ticket guys go crazy here at my school. Each ticket's like $80, and then they come around like 2 times per day, bro. Brutal. Okay, we just closed above. I'm gonna get in another position. How much can I risk? Let's drop. I'm putting my stop loss like still like below this low, because we can still pull back down into this 30-minute IFG. And remember, I'm in it for the longer run. I want to get this position all the way. Nice. So I don't know if you guys will be able to see this, but I got in on another trade locker evaluation. I have 3 positions. One of them is one lot, one of them is higher risk, and I just added another one at the top. My stop losses, one of them's at 2628, 2630, and 2632 below the low. So they're pretty far away, and I'm going to be able to hold these positions like pretty stress-free. So we closed above this IFG, and now we're moving a little bit higher. We still have 15 minutes to close above this one that we want to close above. Okay, we disrespected the 1 minute IFG again. IFG. Technically, there's still 30 seconds to this. So we'll see if we pull back in and go higher. You guys got to get to the level where you can just kind of spot for value gaps. There's another one right here. Let's see what's going on the 15-minute time frame as well. 15-minute time frame, this big bullish fair value gap on the left-hand side would become a bullish reaper, and we already tapped into it right here. The low of this candle is 2636, and 2636 0.02, and the low of this candle is 2636.9. Yeah, so it did come below it. So it already tapped into this bullish reaper. Let's see, 1 minute time frame. Okay, so look, even though we disrespected the IFVG that I initially used to add another position, we respected the fair value gap below it. We have yet to like disrespect this one. If we disrespect this one, then I'd be a little more like scared, you know. But it's fine if it disrespects a IFVG if there's literally a FVG right below it. Like, that's okay. You don't want to get out of your position right away. You can see markets probably just like stalling in this area until it gets closer to 5:30, and it could just close, or 8:30 technically in EST, and it could just close above this fair value gap or this one. Both of these, like, it honestly could just consolidate here and then tap into one of these and go higher. So I'm not 100% confident that we could just run from here, but I used it as another confirmation that like we're bullish, we're respecting bullish confluences. Like even this one right here, that's another confirmation. This right here, that's a confirmation. This is confirmation. This is a thing called order flow. Let me mark it up. Order flow. You can basically see based off of the price action what market is respecting. And you can see that in this case, market is respecting all of these bullish confluences. So we're more likely to look for buys. And we're kind of just in between this range. So if you want to like take some higher risk positions, you'd obviously want to wait for 5:30, see if it closes above this bearish FVG or if it closes above this balanced price range, and then determine what to do from there. So this bullish one just became a IFVG, and this bullish candle right here became a bearish order block. So this is like a plus bearish setup right here that I like to use. But I'm not looking for sells, so I'm not gonna trade that. We're just waiting. We're just waiting. Why don't I trade on all accounts at the same time instead of entering at different times on all of them? Does anyone else want to answer that question? So what would be the benefit of trading different accounts separately? First of all, one of like the main things is just copy trading is kind of annoying. Most of the copy trading websites charge for their copy trading. Then also linking, like say this account with other accounts, then different account sizes. Like sometimes I have a 200K, 100K there, 150K. Each prop firm has different rules. One of them has a 2K buffer where every day if I lose 2K, it'll close the trade automatically on E8. Then funding pips doesn't allow copy trading. Like I would. But then at the same time, there's also the benefit, like if I take a really bad, like if I have a bad day, I'm just off on my bias, then I wouldn't want to lose money on each and every one of my accounts. Same with payouts. Like once I'm at the payout mark, each prop firm has a different payout mark. Like trade day, you could withdraw every day. Funding pips, you could withdraw once a week. E8, you could withdraw as soon as you hit 2K. So you obviously, like, there's different rules, so you don't want to be trading all of the accounts at the same time. It's not the most optimal thing to do. Hope that makes sense for you. You ate a protein shake today? You gotta eat some more food. Well, I'm not sure what I just did. Hope that makes sense for you. You ate a protein shake today? You gotta eat some more food. Well, I'm not sure what I just did. Okay, I'm good. I thought I paused it. You guys can't see my screen when OBS pops up, but I accidentally clicked like the pause button or something. Okay, so we have 6 more minutes. This is good, guys. Look at this. We were staying inside of this range, and then we finally expanded from like nothing, basically. There's no reason for it to just run up from here, other than maybe this bullish for like Reaper right here. It's actually just a fair value gap because we didn't disrespect it. But yeah, still kind of random little move up. Order block created, tapped into the order block right here. There's also a new fair value gap, so this is a high probability order block. Ran up, created another order block right here. And now we just wait 5 more minutes and see if we close above the 30-minute bearish FVG. So this is good. You guys see how we're not returning back to this lower one? That's because if there is a higher one, then this becomes a like seller trap where the sellers in here, they will not have an opportunity to close their positions in profit. Because this is a bearish fair value gap, right? So there's a lot of sellers in a bearish fair value gap. That means sell side inefficiency. So as long as we close up here, we're probably not going to return lower. I would still secure my stop loss below it though. Remember, even though the chances are that we don't return there, it still could. But yeah, if you're futures and you're just scalping, then get into your position, tight stop loss, target this, and we get out. That is if we close above there nicely. I don't know if you guys have ever thought about this before, but look at my screen right now. I'm going to zoom in on this part. So first of all, look at the 30-minute time frame. You guys see that right here, there's a 30-minute fair value gap, and this is the high of that 30-minute fair value gap. But if I go to the 15-minute time frame, you can see that the fair value gap extends a little bit higher. So this is what the actual fair value, or the 15-minute fair value gap looks like. That's the high of the 15, this is the high of the 30. So which one do you look at? So look, say, this is why you can't purely trade the 15-minute time frame. Because you might think, oh, we still respected the 15-minute one, I'm going to go in for sells. But the higher time frame rules. So in this case, you still treat the, so if this 30-minute candle closes above this fair value gap, then you treat the, like this fair value gap as an IFAG and you go target higher. You don't look at the 15-minute one because the 30-minute is a higher time frame. So it's more significant. What do you guys think? Place your bets in the chat right now. Are we going to close above this one or are we going to close below it, come back into it, tap into this one? What do you guys think is going to happen? It's a little too obvious now. It's nice. This is really good price action. I'm honestly very satisfied. We hit draw on liquidity 1. We hit draw on liquidity 2, which was this high right here, liquidity. That's where I closed my position on the futures account. This is draw on liquidity 3, another 30-minute fair value gap. And then we have draw on liquidity 4 over here, which would be the 1 hour fair value gap, bearish, that we want to close above. Is my position on the future? This is the moment of truth here. 50 seconds left. It is a little bit unfortunate when this happens. Like there's 1 minute left. It was up here, but it pulls all the way back down, and you can no longer be confident, like, because you don't know anymore. If it closes above, perfect. Next candle opens, you're confident, you get in your position, and you aim higher. But when it closes below after you were waiting for it to close above, you're like, shoot, is it bearish? Is it bullish? What do I do now? Do I have to wait for it to pull back, tap into this one, and go higher? Which is what it's likely gonna happen right now. 9 seconds, that's not enough time for it to run up here and close. 5, 4, 3, 2. Okay, so look, we can't be confident in a buys now. I still wouldn't want it to come down into this, but we clearly respected this bearish fair value gap. We could have closed above it, but it didn't. There's always a reason for that. Maybe it just runs from the breaker block. Maybe it just ignores this fair value gap anyways and just goes higher. But we can't be fully confident in this. Just doing some quick maths here. I gotta figure out how much profit I need to pass. Oh, my funding pips account. I'm not sure if they'll send me the email right now. This might mean that it still needs another day to send it. Because I'm technically done with this, but I might need to wait until the market closes again and then opens. Unfortunate. Unfortunate. Truly unfortunate. Yeah, guys, I think I've had enough here. Because it's all just a game of patience from here. Like, I'm still expecting buy side, but I don't know if it's gonna first pull back into here, if it's gonna even go a little bit lower, use the order block, or if it's just gonna run up from this 30-minute candle. There's no point in sitting around anymore. Like, we have the bias down, we have the lower time frame confluences that we would use down. So now it's just a matter of waiting till it does something for confirmation, taking your trades, getting out. Like, the goal is just to be able to learn exactly how I see the market so that you guys can take the trades on your own when it happens. Like, even trades that I might not be taking because either I'm busy, I'm out, or I simply didn't even see it. That's your goal. You could literally take trades. Like, one of my one-on-one students, he even sends me trades sometimes, and I'm like, dang, I didn't even think of that. Or I didn't see that. I missed something on the time frame. That's why it's good for you guys to learn it, like, and not just like be here for signals or trades. You got to learn this stuff. All right, yeah. So just keep your eye on this stuff. Go on your gold chart, mark this stuff out. Remember, this line is the 1 hour high. So on the 1 hour time frame, there's a bearish fair value gap right here. And we also want to see it close above in order to target the actual target, which is up here. So on the 30-minute, we're just looking for that confirmation, which we didn't get because this 30-minute candle closed below it. Like, that obviously doesn't mean that we're all of a sudden going to be bearish. This just means that we have to be a little more patient before getting in our trades. Because look, if we got in for a buy, even though it disrespected it, we would have caught this right here. We would have gotten cooked a little bit. Yeah, that's it for this stream. Thanks for hopping in. Let's make some money this year, guys. All right, take care.